Yo, what's up guys? In this video, I'm gonna be breaking down how to build your own sports betting model. So I started my career in quantitative trading, so I spent a ton of time building financial models to trade things like natural gas, derivatives. So I have a lot of experience with modeling. And in this video, obviously there's a bunch of different ways to create a sports betting model. I'm gonna do a basic one, give you some ideas if you wanna try to build a more detailed, a more complex model. And most of the modeling is gonna be based on market data, right? Sportsbook odds, liquidity on exchanges, bet type. There's gonna be a ton of different things that I include into this model. I'll link to it below in the description. But what I did wanna say is what my model won't include is basic stats. Like, I feel like if you Google or you watch other videos, this is how you create, a sports betting model. A lot of them are like, take a player's last 5 games, take an average of how many points they've scored in the last 5 games, and then bet the over if the points projection is lower. That's not useful. That's not what we're going to be talking about in this video. Simple historical stats, weather, stuff like that. Weather obviously doesn't apply really to the NBA, but to the NFL, things like that. The sports books already priced that in to the odds they're putting out, right? FanDuel is a $40 billion company. DraftKings is a $20 billion company. They're not idiots. DraftKings knows if a player has scored over 30 points in the past 5 games. Like, all of this simple public information, historical data, it's already going to be priced into the odds these sports books are putting out. So my model will not include these basic stats, like how has a player performed over their last 5 games, last 10 games. But without further ado, let's kind of get into how I would build a sports betting model from the ground up. So a couple things that are almost certainly pretty obvious, but I figured I'd mention them anyways, is there's no model that's gonna tell you, here's who's gonna win the game, right? So for example, tonight we have game 5 of the NBA Conference Finals, Thunder versus Timberwolves. I mean, you can ask ChatGPT, who do you think's gonna win? And unsurprisingly, ChatGPT gives you the favored team, the Thunder, but there's no model that's a crystal ball and can just predict the future. Everything's gonna boil down to probabilities. So for example, currently, the Timberwolves are about plus 300 underdogs in game 5. So plus 300 means they're 3-1 underdogs, or the market, sportsbooks, are implying that the Timberwolves are roughly 25% to win the game. 25% to win the game is currently the market average. 25% Timberwolves, 75% Thunder. So if our model, let's say, has the Thunder winning this game 90% of the time, then it would be a profitable bet to bet on the Thunder. And at the same time, right, because the market's implying that the Thunder are about 75% to win, minus 300, 3-1 favorites. So if our model says the Thunder are 95% to win, we'd want to bet on the Thunder. On the other hand, if our model says the Timberwolves are, 40% to win the game, they're currently implied by the market plus 300, 25% to win. So if our model says the Timberwolves are 40% to win, we'd want to bet on the Wolves. Now, another thing to mention is this is Sports Betting 101, but all of these sports books, every single book sets their own unique odds. So the core of sports betting, step 1 to becoming a profitable sports bettor is you need to make sure you're getting the best possible price, the best possible odds on whatever bet you lock in. So for example, tonight, if our model says to bet on the Timberwolves, we want to play them at plus 300 on FanDuel or one of the other books that has them at plus 300. Obviously, it makes no sense to bet the Wolves at plus 275 on Rebet if we can get them at plus 300 on FanDuel. So getting the best possible price, the best possible odds, that's critical, in sports betting in general, but also is going to be really important when we're using this model that I'm kind of going to run you through. So the first input to any sports betting model should be market data. odds on other sports books. What's really nice about sports betting is there are hundreds of sports books that set odds, right? So we essentially have hundreds of data points on where the line should be set. So for example, one bet that I just locked in for game 5 of Pacers-Knicks is Pacers first quarter money line at plus 136 on FanDuel. You can see FanDuel's offering the best price, the best value in the market. It looks really good relative to other books. But basically my point is if you have a model that's not incorporating odds on other sports books, and let's say your model has the Pacers at 70% to win the first quarter, well, guess what? You're wrong, right? If your model has the Pacers as 70% favorites to win the first quarter, you're wrong. Your model sucks. Every sportsbook, right? These are multi-billion-dollar companies, Circa, Pinnacle, DraftKings. Every book has the Pacers as underdogs, right? You have hundreds of data points. These billion-dollar companies, sports books with teams of data scientists, they're taking bets, adjusting their odds based on where action's coming in. If your model has the Pacers as 70% favorites to win, and every other book has them as like plus 120 underdogs, so like 40%, 45% to win the first quarter, you're wrong. You're just so far off from reality, right? You're never gonna have that big of edges in sports betting where you're getting a team at plus 136 that's actually a 70% favorite to win. So the first input, in my opinion, to any model needs to be what are the odds on other sports books? What are the odds, especially on sharper sports books? So there's some books that have higher betting limits. They're known to be more active betting markets, sharper sports books, such as Pinnacle, Circa, Bet Online. So we want to incorporate the odds on these sharper sports books into our model. So for example, Pinnacle Sportsbook, you can see they have $500 betting limits. I just grabbed this play off the OddsJam positive EV tool, but I'm going to use it kind of as an example. As you can see, Pinnacle Sportsbook, their market is plus 122, minus 138, right? That is their market. They have the Pacers as plus 122 underdogs, the Knicks as minus 138 favorites on the first quarter money line. So basically what you can do is you can devig the market. You can remove the juice from Pinnacle, right? Pinnacle's charging a 16-cent spread. Pacers plus 122, Knicks minus 138. So they have 16 cents of juice baked into their market. That's how sportsbooks make money. They charge a spread around fair value, kind of like a stockbroker who will say, I'll buy this stock for 122 or I'll sell it at 138. They're charging a $16 spread. You know, bid-ask spread is what that's called in trading. Is in sports betting, this is called the vig or the juice. So basically what you can do is devig the market to back out what does that specific sports book think is fair. So in this case, right, Pinnacle's market is plus 122, minus 138. If we devig the market, remove the juice, remove the vig, according to Pinnacle, the Pacers are fair. No vig odds, fair odds, true odds. All of those words mean the same thing, like what is the fair line? So according to Pinnacle, which is known to be a pretty sharp, accurate sports book, they have, you know, the no vig odds would be plus 128.72, so we can just round up, plus 129 Pacers, minus 129 Knicks. That's a fair market, a market with no vig. You can bet on the Pacers, 100 to win 129, or on the Knicks, 129 to win 100. That's a market with no juice, a fair market, but obviously sportsbooks then juice their markets. They add vig, they add the juice, because that's how they make money, right? Sportsbooks aren't in the business of offering fair markets with no juice, because that's how they make money, is they charge the vig or the juice. So according to Pinnacle, if you devig this market, the Pacers should be priced at plus 129. On FanDuel, we're getting plus 136. So we're getting above fair value. So based on Pinnacle's market, this bet is profitable. This bet is plus EV. However, Pinnacle is only one sports book, right? That's only one data point. There's, hundreds of sports books, hundreds of data points. All these books, some books are sharper than others. You can see Pinnacle has $500 betting limits. They have pretty tight markets. It's known to be a sharper bookmaker with pretty accurate lines. They accept a lot of sharp betting action, stuff like that. Liquid markets, active markets. But if you look at Circa, their odds are slightly different, right? They have the Pacers as a bit bigger of underdogs. They have the Pacers plus 125 and the Knicks minus 145. So compared to Pinnacle's market, Circa saying, yeah, we still think the Knicks are favored to win the first quarter, but we think they're a bit bigger favorites than Pinnacle does based on their market, right? They're giving you a better price on the Pacers, a worse price on the Knicks. So Circa has the Knicks a little bit more favored to win the first quarter. So Circa is another sharp book. It's another data point. So what we can do is devig Circa's market. And in this scenario, it would be plus 133 is the fair price with the VIG removed on the Pacers. Once again, we're getting plus 136 on FanDuel. That's above fair value, so this bet is plus EV or profitable, but the edge is smaller. The profit margin is smaller, right? On Pinnacle, fair value was plus 129. We're getting plus 136 on FanDuel, so this bet seems even better. Relative to Circa, fair value is plus 133. We're getting plus 136, so this bet's profitable, but we're not getting as big of a discrepancy. We're not getting as much value above fair odds. So here, I'm looking at two data points, right? So I could have a model with just two data points, Pinnacle and Circa, right? These books are known to be pretty sharp, be pretty good at setting lines. So we could just take a weighted average, right? Pinnacle has them plus 129 fair value. For the Pacers first quarter money line, Circa was plus 133. If you take a 50-50 weighted average, the fair price for Pacers money line first quarter would be plus 131. We're getting plus 136 on FanDuel, so this bet would be plus EV. So we're taking a weighted average. We're using sportsbooks as data points, as sources of information, and that's really important. So let's start out by talking about market data, kind of how to make a model. With market data as your first input. This should be anybody, right? If you're making a sports betting model, it's really critical. This should be the first input to your model, because if your model is saying the Pacers are 70% to win the first quarter when they're big underdogs, your model sucks, right? Like, you have to be looking at the market data from these multi-billion-dollar companies that are taking wagers, adjusting, prices based on where action's coming in, based on where betting volume's coming in. If the Pacers were favored to win the first quarter, every sharp bettor in the world would have already bet on them at underdog odds, and the market would have moved towards the Pacers. But obviously that didn't happen. It's kind of like if you're modeling a stock price. And Facebook stock, I'm not sure what it's currently trading at, but let's just say like $700. If your model is saying it's worth $300 and you're getting $400 of value selling Facebook, shorting Facebook, your model sucks, right? The discrepancies are never going to be that big. You have to have some reliance on market data. So let's run through how I would think about starting to build a model. So again, we have hundreds of sports books posting odds. All of these books are data points. So again, Pinnacle, it's known to be a pretty sharp book with pretty accurate lines. You can see they have $500 betting limits, so it's not tiny. This game's still a day away. They have $500 betting limits on NBA first quarter money lines for anyone to take advantage of. So if you remove the VIG, the juice from Pinnacle's market with a no VIG odds calculator, most important calculator in sports betting, fair value would be plus 129. We're getting plus 136 on FanDuel. So this bet would be plus EV. This bet would be profitable. But again, Pinnacle's only one book. It's only one data point. We also want to consider Circa, Bet Online, kind of these other sports books. So one thing to mention is some books copy each other's odds. So when you're building a model, for example, Sports Betting AG, they have the exact same odds as Bet Online. So you don't really want to double count them. And again, this is a very rough model, but just as an example, let's say I say, I want Pinnacle for this market to have the highest weighting at 30%. Circa 25%, maybe a little less sharp compared to Pinnacle. Bet Online 15%, FanDuel 10%. I just kind of assigned various weightings. Again, this isn't perfect. Ideally, in your model, what you're doing is you're back testing. Ideally, you're considering every sportsbook, Rebet, DraftKings. Every sportsbook is a data point. Every book setting their own unique odds is a data point. All these books are, taking wagers. If you pull up a line movement chart, all these books are taking bets, adjusting their odds. So you can actually see lines have kind of drifted a bit towards the Pacers. So maybe FanDuel is a little stale, still offering plus 136. But all of these sports books, right? DraftKings, BetCris, every book is a data point. Some books are sharper than others, especially for specific markets. So in an ideal world, everything would be back tested and constantly updating. However, for the sake of an argument, this is building a rudimentary model, an early stage model. So I don't have time to back test a ton of historical data, train a model. What I'm going to do is just assign the sharper books higher weightings. So for example, if, what I can do is take all of these books. So Bet Online, which is also known to be a pretty sharp book, their market was plus 120 Pacers, minus 140 Knicks. Devig the market, fair value would be plus 128.33, which you see here. So basically what I can do is I can take a weighted average, divide by the weighting, and in this scenario, for these numbers I put in, which again aren't perfect, ideally you're back testing everything, which is exactly what OddsJam does, this OddsJam recommended book weights. It's constantly back testing sportsbook sharpness, which books are sharper for specific markets, stuff like that. But if I was building this from scratch, obviously I'd have to do that myself. So I just took a few of the main sharp books, I devigged their markets to get fair value, and then I took a weighted average, and this comes out to plus 132.4. So again, if I wanted to weight Pinnacle higher, it doesn't matter if the sum of the weightings doesn't sum up to 100% because I'm just normalizing it. So let's say I think Pinnacle is super, super sharp, and I want to weight it even higher. I can up it to 130%. Because I think Pinnacle is really smart. My weighted average is going to go down. So now the edge of my bet, the profit margin of my bet is going to be even higher. So you can kind of play with these weightings. For example, my bet that I placed was on the Pacers at plus 136 on FanDuel. If I actually think FanDuel is sharper than everybody and I want to up FanDuel to 90%, well, now the weighted average, right? The fair price, according to my very rudimentary model, would be plus 139.9. FanDuel's offering plus 136. So if I think FanDuel's really sharp and the weighted average, the fair price, incorporating all these books' odds, where now I up the weighting of FanDuel, now this bet would have a negative profit margin, right? This number's negative, a negative 1.6 edge. So over the course of the long run, betting $100, I'm going to lose $1.60 out of 100 for every $100 I bet on a bet with a negative 1.6 edge. But again, obviously, I don't have FanDuel at 90%, so you can play around with these numbers. I can't stress it enough. I'm not incorporating every book, but in an ideal world, even if Rebet just has a 0.2% weighting, something very small, ideally, every sportsbook is a data point. They're all taking wagers, adjusting their odds based on where action's coming in. Every sportsbook is a data point on fair value. So in an ideal world, you incorporate them all. You're constantly back testing this. And also, it depends on the specific market. So you can see OddsJam has this bet as a 0.44% edge or profit margin. So what this tab does, the OddsJam recommended book weights, it doesn't do anything complicated. It's just back testing all these books, how sharp are, individual sports books for specific markets. So for example, for player props, some books are sharper than others. For mainline markets like money lines, spreads, totals, Pinnacle, Circa, Bet Online, and also BetCris are known to be very sharp books. Whereas for player props, some of the US sports books, US books tend to get a lot more betting volume. They're more active betting markets, more liquid betting markets for player props. So for player props, these weightings would have to change. So for player props, I'd actually probably want to weight FanDuel higher and I'd want to weight Pinnacle less. Because again, these US books get more betting volume, more action on player props. So FanDuel, DraftKings, US Sportsbook, Caesars, we'd want to have slightly higher weightings because betting on player props is so much more popular in the US compared to some of these, typically considered sharp books like Pinnacle, which are, not available in the US, but again, they're very accurate books for mainline markets. Pinnacle, Circa, Bet Online. So anyways, based on this random, not random weightings, Pinnacle, Circa, Bet Online are all known to be pretty sharp books. So these weightings maybe aren't horrible, but based on the model I put together, right, taking a weighted average of these fair odds, my bet would have a 1.544% edge, which is a little higher than what OddsJam is saying with the, back-tested historical line, has it at 0.44%. So according to my model, I'm actually getting slightly better odds. So maybe OddsJam, based on the back test, has FanDuel weighted a bit higher and Caesars as well. So maybe something like this is more accurate, right? Now you can see 0.59% versus 0.44. We're getting closer to what OddsJam actually has the edge at. But this is kind of how I would set up the start to my model. Again, we're just at the start. But using market data, real-time data, sportsbook odds is critical. So let me reduce these numbers to what I had initially. And another thing I wanted to mention is these peer-to-peer betting exchanges, Novig and ProfitX. You can see both Novig and ProfitX, they don't have first quarter money lines posted here yet. However, if you look at the game tonight, Timberwolves Thunder, they do have lines posted. So Novig and ProfitX, you can see them right here. I can actually refresh this real quickly. So Novig and ProfitX are peer-to-peer betting exchanges. Peer-to-peer betting exchanges. So because they're peer-to-peer, there's no limits. And that attracts a sharper crowd, right? Like we all have probably heard that these really soft sports books, easy to beat sports books like DraftKings, typically they're not accepting very large bets. On these peer-to-peer sites like ProfitX right here and Novig, they accept large bets, right? They're peer-to-peer. So if someone's willing to take the other side, like if I want to bet on Timberwolves plus 300 for $1 million, if there's someone willing to take the other side, Thunder at minus 300 for, $3 million, then I'll get filled. I'll be able to get my bet down. Again, these are peer-to-peer betting sites. However, probably you're not going to be able to get down $1 million. But anyways, sometimes these betting exchanges have very little liquidity. Liquidity is how much you can currently bet at a given price. So for example, on Novig, on the Thunder, someone's offering 5.6K. It may be a little hard to see, so I'll zoom in a bit. Someone's offering 5.6K on the Wolves at minus 313. So in other words, someone's trying to take the opposite side, someone's offering the Thunder 5.6K at minus 313. That person is trying to take the opposite side, Timberwolves at plus 313 for, a pretty big position. So as these exchanges get active, they actually become pretty sharp books, right? Like you can imagine if there's, $1 million, let's say if there's $1 million in liquidity on Thunder minus 313, that means there's somebody trying to take a huge position in Timberwolves plus 313. If somebody is offering Thunder minus 313, let's say instead of 5.6K, this said $5 million, whatever, something like that, $5 million someone's offering liquidity of Thunder at minus 313, that means someone is trying to take a position on Wolves plus 313, the opposite side of the liquidity, for millions of dollars. So that person is almost certainly a sharp bettor, a syndicate. They're trying to get down a huge position on the Timberwolves at plus 313. So this market, as liquidity grows, these books become sharper. Sometimes there's almost no liquidity. Other times there's a massive amount of liquidity. Like you can see right here, I mean, I wouldn't call this massive, but 5.6K on the Wolves, being offered on the Thunder at minus 313, that's not small. Someone's trying to bet the other side for thousands of dollars. So these betting exchanges, especially for big games, they get pretty active. So what I ended up putting into my model, again, it doesn't apply to this specific bet because Novig and ProfitX don't have any odds, but is 7.5%. And again, you'd want to backtest this. You'd want to backtest all of this in an ideal world, but I put Novig and ProfitX as a 7.5% weighting. Again, you can play with these numbers, maybe 5% per $1,000 of liquidity. So as an example, if somebody was offering, let's say, the Knicks at minus 132 for thousands and thousands of dollars. So Knicks at minus 132 for, let's say, $5,000. That's a fair amount of money. So I'd actually want to weight this in my model. But you need to consider liquidity for these peer-to-peer betting exchanges. And I'll kind of try to give you a simple example because sometimes there's a ton of liquidity, other times there's not. So for example, if I go to like player points, a lot of times these exchanges don't have a ton of liquidity on player props, but here they do, right? Like someone's offering Alex Caruso over 8.5 points for 1.7K. 1.7K at plus 108 odds, which means someone's trying to bet the under at minus 108 for thousands of dollars, which is a pretty big position for like $2,000. So you need to consider exchanges. It doesn't apply to this specific example, but you need to consider exchanges and their liquidity in your model. Because again, if there's massive amounts of liquidity, it's almost certainly sharp bettors, syndicates, and you want to weight that into your model. So step one to creating a sports betting model that's going to help you make a lot of money is about, just like I explained, determining fair value based on a weighted average of market data, sportsbook odds. And your model should probably weight sportsbooks differently. Some books that are known to be sharper, circa, BetCris, those should have higher weightings. And again, in an ideal world, this video is an intro to modeling. If you like this type of content, I can do way more detailed videos about modeling, for sports betting, how to create your own model. But in an ideal world, right, you have all these different weightings from hundreds of different sports books. Every book has some percentage of weighting in your model. You're constantly back testing it. And honestly, you should probably have different book weightings depending on the market, depending on, what sport. Some books may be sharper for WNBA. For example, WNBA, nobody is betting on this really outside of the US. So foreign sports books, even if they post WNBA lines that are traditionally sharper books like Pinnacle, are going to be less sharp for the WNBA. They're not taking as much action, as much betting volume, so they're less liquid, active markets, whereas US books like FanDuel may actually be sharper for the WNBA. You should be back testing all this by sport, by league, by bet type, market, player props. As I kind of explained, US sports books like FanDuel and DraftKings are actually a little bit sharper than you'd think for player props because player props are way more popular in the US compared to, internationally. So books like Pinnacle are much sharper for mainline markets compared to player props. But anyways, without further ado, what I wanted to get into next is kind of thinking about bet sizing. So in beginner videos, I often say the Kelly Criterion is the best way to manage your bankroll, and that's true. but you can even fine tune this a little more, right? You can add additional layers to ideally try to maximize your profits and get the optimal unit size or bet size for all these plays based on a wide range of variables. So I'm going to take you through that now. And the final thing I wanted to mention before we jump into unit sizing, bet sizing, all the variables I would personally consider is do not sleep on peer-to-peer betting exchanges. ProfitX and Novig are two peer-to-peer sites. Again, they oftentimes have tons of sharp bettors on them, syndicates, a ton of liquidity. So they're great data points in a model. But again, they're peer-to-peer. So for NBA money lines on massive playoff games, there's oftentimes a ton of liquidity and these books are super, super sharp. Whereas other times for random player props on an MLB game, there's basically no liquidity and they're useless in a model. So depending on how much liquidity is available on ProfitX, Novig, these peer-to-peer betting exchanges, that's going to affect, are they extremely important in your model in terms of your weightings? You need to consider liquidity, or are they useless? Because again, they're not traditional sports books, they're peer-to-peer, which means they attract a lot of sharps, syndicates, no limits, and they may be super impactful for some bets, especially mainline markets like spreads and totals for main leagues like the MLB where there's a ton of liquidity. And other times they may be useless and there may be no betting volume, no liquidity on these exchanges. So in many ways, your unit size, how much you decide to bet on a particular play, is actually way more important than whether you decide to bet something or not. So for example, if I'm not super confident in a play or my edge, the market's wider, something like that, I may still throw down a little bit of money, $50, $100. But when I really like a play, I have really high confidence, sometimes I'll increase my unit size to thousands of dollars if I really, really like a play and am really confident in the edge. And again, the Kelly Criterion, I've made videos about it. That, if you want to distill everything into a simple formula, is the easiest way and the best way to manage your sports betting bankroll. However, you can kind of optimize and fine tune this, your bet size or unit size with a model to increase your profit margin long term. And I did the same thing as a trader. We were taught to do the same thing, as a trader when I worked on Wall Street. There's a lot of different variables that you can't really distill into a single formula. So for example, if I thought a trade had a 2% edge, I'm not trading every single, trade for the exact same amount of money. So for example, maybe if a really smart counterparty, if I see trade alerts that a really smart hedge fund is loading up on a particular, derivative or something like that, a particular asset, if I have a 2% edge, I'm going to want to trade bigger. Because I'm seeing a really smart counterparty taking the same trade, a really smart hedge fund, prop trading firm, something like that. So if they're loading up on a position and I have a 2% edge, I'm going to have a lot higher confidence in my trade and I'm going to want to trade it bigger. Even though a 2% edge, right? If there's a 2% edge on a liquid asset where there's not a ton of trading volume, things are more uncertain, I'm not going to trade it as big, right? Because I have less confidence in my edge compared to a super liquid market. So liquidity was something we thought about all the time in trading. Facebook stock with a 2% edge is amazing, right? It's a super liquid, super active market compared to, Texas natural gas futures where a 2% edge, you may decide to not even trade it because it's such a, risky, illiquid asset that you don't even want to deal with it, even though you think your trade has a 2% edge. So let's kind of get into how I think about unit size in sports betting and how you can distill that into a model. So here you can see my bet on Pacers plus 136. I played this for $193, which I'm not going to act like that's some, special number or magic number, because I can kind of show you a lot of the times if I'm playing a bet, a plus EV bet, I'm just betting it for the max I'm allowed to. So for example, if I go to this play on FanDuel, Tenya to record an RBI, they're giving me a max bet size of 214.29. So in the case of the Pacers example, that's just the max FanDuel gave me. However, it really is important and I think really beneficial to consider, modeling and based on a bunch of different variables, updating your unit size. But the first thing I wanted to mention is every odd has an associated win probability, right? So for example, if a team is plus 300, they're 3-1 underdogs, 25% to win. So in this example, the Pacers, according to my model, they were fair at plus 132.411. So if I go here, plus 132.411, that implies that according to all these sports books in my model and their different weightings, this bet, Pacers first quarter money line, this play has a 43.3% chance of winning. Every odd has an associated probability. Minus 200, 2-1 favorite, 2/3 to win, 66.7%. So in this case, according to the weighted average odds, plus 132.411, that just means 43.03%. That's the probability that I'm going to win my bet on the Pacers at plus 136. And again, basically what this means is 43% of the time, say my unit size is $100, 43% of the time, I'm going to win my bet and turn $100 into 136. The rest of the time, the other 57% of the time, I'm going to lose my bet and I'm going to lose my unit size of $100. So basically what I can do is I can go to a Kelly calculator and I'll kind of show you how I do this. So where is this, baby? So here we have a Kelly calculator. I recommend using 0.5 as your Kelly multiplier. We're getting plus 136 odds, and according to my model, right, based on the fair price here, this wager has a 43.03% chance of winning. So what this tells me to do is bet 0.57% of my bankroll on this play. So 0.57%, which means if my bankroll is $10,000, I should be betting $57 on this particular play. So what you can do and what I recommend doing is fine-tuning this and adding multipliers based on a bunch of different factors. So for example, the first one I have is confidence. Is this bet profitable plus EV to every other sportsbook's market? And if we go back here, right, I'm getting the Pacers on FanDuel at plus 136 on the first quarter money line. If you look at all these other books, aside from FanDuel, we're getting above fair value. Pinnacle was fair at plus 128.72. We're getting plus 136. Circa plus 133. We're getting plus 136. So this bet is plus EV to Pinnacle's market, Circa's market, BetOnline's market, Caesar's market. Obviously, it's not going to be plus EV to the book you're betting on. It's not going to be plus EV to FanDuel's market, right? We're getting worse odds than the fair odds, the no vig fair odds, according to FanDuel, because FanDuel's the book we're placing the bet on. However, right, this bet is profitable to every other sportsbook's market, right? Every other sportsbook is saying, hey, plus 136 on Pacers first quarter money line is a profitable bet. And they're telling you that, again, through their market, through their odds. So Pinnacle's market, plus 122, minus 138, means the Pacers are fair, plus 128.72. We're getting better odds. So basically, Pinnacle Sportsbook, one of the sharpest books, is telling us, yeah, you want to bet this on FanDuel, plus 136 is a profitable bet. So what I have here is if the bet is plus EV to all other book markets, add a multiplier of 2x, right? So basically, instead of following the Kelly calculator, I'm saying, hey, every other sportsbook, every other data point in the market is saying your bet is profitable, your bet is very good, so I should double my bet size. So in this case, right, we have bet size. I just want to double this. And again, you probably want to backtest all this stuff in a model. So if this were the only variable I was looking at, instead of betting $57, I'm going to bet 114 because I have higher confidence in my play. The same way how I explained in trading, if a really smart counterparty hedge fund, if I'm getting trade alerts that the smartest hedge fund is loading up on some weird derivative and I'm able to buy that derivative and get an edge, I'm going to want to put more down. I'm going to want to have more action down on that trade. Even if my edge is just 2%, I'm going to want a bigger position because I have other information, right? I increase my confidence by seeing, hey, a really smart hedge fund is loading up on this position as well. So that increases my confidence and I increase my trading size. The next thing is how active is a market. So I'll give you an example, right? Is what you can do is based on how active a market is you can scale up or down your unit size. And again, this would require a bunch of different multipliers. But for example, first set total games for women's tennis, there's not as many sportsbooks that post lines. They're not as liquid, active of betting markets. So if I'm going to place a bet on this, I'm going to want to scale down my unit size. Right? So instead of betting $57, maybe I'd only want to bet 20. I want to add a multiplier. Because I'm betting on in a liquid market that doesn't get a ton of betting volume, I want to scale down my unit size. However, in this case, we're betting on a mainline market, right? NBA money lines. I mean, people are betting millions of dollars, tens of millions of dollars, if not billions of dollars on NBA money lines. These are super tight, liquid, popular markets. The markets are super active. Sportsbooks are taking tons of bets, kind of adjusting their odds, as you can see in a line movement chart, based on where action's coming in. So you can see off the open for tomorrow, lines are already moving towards the Pacers. These are super liquid, active markets. So in this case, right, and again, you kind of want to perfect everything, but because the market's super active, maybe I'd want to, double this bet again and increase my unit size because this is a very active, liquid betting market as opposed to what the Kelly calculator is telling me. I want to increase my unit size to 228. Again, all of this should be back tested. What markets are liquid? What should the multiplier be? All that should be back tested. Another thing you can consider is the market crossed? And if the market's crossed, maybe add on a multiplier. In this scenario, the market wasn't crossed. What crossed means is arbitrage. So I'll give you an example here. Is you can see on Rebet, the book above me on my phone, Moutet plus 8.5 is minus 135 odds. This is arbitrage to Novig. And there's a lot of liquidity on Novig, 2.2K. So arbitrage betting is when two sports books, in this case Rebet and Novig, this peer-to-peer exchange, when two books have such different odds, right, that you can bet equal and opposite outcomes. Devigging minus 8.5 on Novig, Moutet plus 8.5 on Rebet to guarantee a profit. So I could bet both of these in the proper proportion. So if I bet $1,000 on Rebet, there's 2.2K in liquidity on Novig. So even if I could bet the maximum on Novig, 2.2K, this is going to tell me bet $3,000 on Rebet, and you'll make a risk-free profit of $28 regardless. That's arbitrage. But long story short, whenever the market is crossed or arbitrage, we have a lot higher confidence in our play. One of these two bets has to be profitable by definition, right? Either Moutet plus 8.5, minus 135, or Devigging minus 8.5 at plus 138. I could bet both of these in the proper proportion and guarantee a risk-free profit. I could bet, Moutet on Rebet, Devigging on Novig, guarantee a profit. So I know by definition, I could bet both of these, make a risk-free profit. I know one of these two plays has to be plus EV or profitable. So I love to camp on this arbitrage tool and find good bets because again, whenever the market is crossed, right? Just like here, if we already like a bet and it has an edge, we have a lot higher confidence in our edge because we know one of the two bets has to be plus EV. So if the market was crossed, in this case, the market's not crossed. So I'm going to keep this the same, right? For the Pacers bet, it wasn't arbitrage. So there's not going to be a difference. I'm still going to be betting 228. Then what I like to consider is like book liquidity or book softness. You know, if you're betting against a sharper book like Novig or ProfitX, maybe you want to scale down your bet size. I've said before, these peer-to-peer betting exchanges like Novig and ProfitX, they have no limits. So they attract a lot of sharp, profitable bettors. So if this bet was on, you know, Novig or ProfitX, again, you'd want to backtest everything in your model. I'd maybe add a multiplier to scale down my bet size from what the Kelly calculator tells me. So if the Kelly calculator is telling me put 57 bucks down, I'm actually going to bet, you know, 57 times 1/4. I'm going to bet less because, again, I'm betting against a sharp book. I'm betting against a profitable book. Whereas FanDuel, you know, is known to be a pretty beatable book. So maybe I add, you know, a 1.25x multiplier. So I'm betting Pacers at plus 285, right? Again, I couldn't even bet that much on FanDuel if I wanted to. This is the max they limited me to, 193. So it's not even like I can bet that much anyways. This is just as an example. Then the final, you know, there's other things you can add into your, you know, multiplier, like how much liquidity was available. We kind of went through that before when determining fair odds, how to incorporate liquidity into your model. But then another thing I like to do is incorporate market width. How wide is a market? This also affects confidence, right? As I said, like Facebook stock trades millions of shares, tens of millions of shares every single day. It's a super liquid, active market. So basically, if you look here at Paul Goldschmidt, these are wide markets. DraftKings is pricing in an 155-cent spread, right? The markets are a lot wider. It's kind of like if there was, you know, somebody who's appraising your house, you want to sell your house, and you're like, what's my house worth? If the appraiser tells you between 320K and 475K, it's like, yo, that's a really wide range. That's a really, really wide market. If someone tells you a market that wide, if someone comes to you and says, hey, I'm FanDuel, I'll buy your house for $390,000, it's like, well, I don't know if that's good or not because the realtor, the appraiser, told me my house is worth between 320 and 475. So if you're offering me 390, I'm not even sure if I'm getting a good deal or not. So market width is another thing you can consider modeling, right? Whereas here, these are super tight markets, right? Pinnacle, if we go back to this Goldschmidt play, you know, Fliff, they have an 195-cent market, 195 cents of juice. So sure, FanDuel looks like good value at plus 390, but the market's super wide, so we don't have as much confidence. Whereas here, I mean, Pinnacle is charging a 19-cent spread. That's a super tight market, a super liquid, active betting market, very tight market. So depending on how tight the market is, maybe we want to scale up or down how much we're betting. For something like Paul Goldschmidt, where the market's a lot wider, we want to bet less. Whereas for these tight markets, like first inning total runs, we want to bet more. So market width kind of relates to market activity. But in this example, maybe because Pacers money line, the markets were super tight, I have high confidence in my edge, I want to add another multiplier and bet even more. So you can see here, I've taken the Kelly calculator from going from telling me, hey, you should bet 157 or you should bet $57 on this play to betting 456 based on all these different factors that I'm incorporating into my model. So the first step is determining, what do I want to bet? Is a bet profitable? So I was able, again, to get Pacers at plus 136, right? We're beating the fair odds, the weighted average fair odds based on my model of different sports books ranked on sharpness. There were no exchanges. So nothing to consider there. So I'm getting above fair value. This bet's plus EV with a 1.5% edge according to my model. But then I need to determine how much do I want to bet on this. And again, you may just find out, like I actually kind of like this play from OddsJam for tomorrow, but you can see FanDuel's telling me, hey, you can only bet 81, dollars max, 81.97. So it's like, okay, I'll bet 81.90 because that's the max they're giving me. So it doesn't really matter what my model says. However, you can then have your model, after determining fair value, is a bet profitable or not? Obviously, you only want to bet on plays with a positive edge. In this case, it's 1.5%. Negative edge bets, negative EV bets, you obviously don't want to bet. However, from there, what you can do is take the optimal bet size according to the Kelly calculator, add in all these different factors to scale up or down your unit size based on your confidence. And that's really important to do, in my opinion. And I have a lot of success with kind of considering variables like this. And again, you want to backtest things. This is very rough, rudimentary intro to modeling, how I think about modeling my sports betting. All of these things, obviously it's not super fleshed out. I can do videos going deeper if people want, but thanks so much for your time. Please like the video, subscribe to the channel, and yeah, have a great rest of your day.